Hey guys, it's Dave. Welcome back to the channel. Thank you so much for watching as always. It's been a pretty good week on the stock market, and for Rocket Lab specifically, the stock's been up pretty substantially over the last couple days, so I've been enjoying that. Hope you have as well. My option trade also doing pretty well for the company, but overall, I'd say this is pretty much just on macro news, not a lot of company specific news for Rocket Lab driving that increase, and we have seen that increase in other companies like Virgin Galactic in the same kind of area. So nothing really Rocket Lab specific driving this move. So this might be a little bit of an unpopular opinion video for a few different reasons, but I really wanted to talk to you guys about the possibility or the, option for the company has to raise capital and why I actually think it might be a good idea to do so in the not too distant future. And this could be unpopular for a few reasons. You could come back and say, Dave, management has already said in the last few earnings calls and various interviews and stuff like that, we have enough capital, we have enough money to get to break even, we don't need to raise more. And that's true, they have said that. You also might think to yourself, well, I think the company is more valuable than what it's currently valued at, so any dilution at these levels could be pretty painful and frustrating, and I get that for sure as well. But I think there is a very good case to be made for raising capital for the company, and I'd like you to withhold judgment until the end of the video and then tell me your thoughts in the comments down below. So I want you to take a look at this chart I'm sharing with you. It should come up on the screen right now, courtesy of Main Street Data. By the way, there is a referral link to that website if you're interested in them down in the description below. Basically, what it's showing us is Rocket Lab's cash and cash equivalents they have on their balance sheet. Obviously, the trend is down and to the right. This is not unexpected as they spend to grow the company. That's kind of why they raise so much capital through the SPAC. And it's kind of the path, every company takes when they get going. You have to invest before you reap the rewards. So if you look closely at the end of Q2 of this year, the cash on the balance sheet was sitting at around $341 million. We are now done Q3, but we're still waiting for the Q3 earnings call and the results to get the full numbers. But judging from the trend of things, I would say the ballpark plus or minus, it's probably around 300 million at the end of Q3. Of course, I could be off by 10 million here or there, but that's really not the point. I'm just trying to ballpark you how much money roughly they probably have right now. And then when it comes to Q4, there's a few things to think about. Well, first of all, back in Q2, they did have that acquisition. So perhaps the spending was a little higher in that quarter specifically, and it won't be quite as high going forward. But that can be offset as well, on the other hand, with this launch anomaly we're dealing with. So we already know that Q3's earnings are going to be worse than expected because of that anomaly. There's one launch that didn't happen. And the rumors I'm hearing now say that it's more likely going to be kind of a 2-launch Q4 than 3 or 4. I mean, I still kind of hope for 3 launches, but what I've heard online is 2 is most likely. I mean, I don't know how reliable those sources are, but that's what I've heard. So there's likely to be more burning in Q4 as well than we originally expected at the start of the year due to less launches. Obviously, the less launches, they still have to pay money for all their infrastructure, all their employees, all the rest, but they don't get that $7.5 million coming in per launch. So that's like an extra 14 potential million dollars that will hit the bottom line, and the cash balance will drop a little bit quicker than expected. Obviously, I do think this is a short-term issue. I do think that next year they will jump back to 20 launches, which is what they were previously guiding for it. And now, if you think about it, they'll be jumping from 10 to 20. So that's a double in a single year. That'll be really impressive if they do pull it off. And hopefully 2024 will be a good year, but they will be burning more capital in Q4 probably than we originally thought they would. And then we also know through comments from Rocket Lab's CFO, Adam Spice, that they will be continuing to increase spending on Neutron as they ramp up towards a launch at the end of 2024 or early 2025. Personally, I'd put more odds on them launching in 2025, but I do really hope we get that 2024 launch off. I think it's going to be tight though. Anyway, he has said spending on Neutron will increase as we push towards that launch. On the other hand, earnings for the current Electron business as well as Space Systems business continue to grow in the meantime, meaning those two items kind of offset each other a fair bit. So what we should expect, at least according to previous earnings calls, is that the burn and spend level should remain kind of in this range we've already been seeing. So if you do the math on roughly how much they've been burning each quarter for the last several quarters, how much cash they have on the balance sheet, you land on like 7 or 8 maybe quarters left of cash available before they run out. So a little under 2 years. And now we think about when spending and what they said cash burn would kind of peak as they get towards a Neutron launch. That is supposed to be late next year or early 2025. So as we get towards that late 2024, early 2025 timeline, the buffer in how much cash is in the bank will start to get less and less as the company pushes towards that Neutron launch. That's really tight considering if your first launch for the rocket is early 2025, you run out of money end of 2025, theoretically, and if something does go wrong with the rocket, it could make things pretty tough. Now, it's extremely rare for a first launch for a rocket to go flawlessly. I know the original Electron launch went amazing. They did have an issue, but it wasn't with the rocket. It was with some ground equipment from some contractors. So even though Rocket Lab does have a good track record on their first launch, it's a small sample size, and I think it's only reasonable to expect that there could be potential issues that they have to work out as Neutron gets up and running. So I'm not actually bearish on the company. I know this first little discussion might sound like it. I am very bullish on the company. I do have a lot of shares and I believe in them and their future. But I just wanted to be honest and blunt about the financial situation and how things are looking. And now that we're all kind of on the same place and know where they are financially, how much time is left, how long they're predicting to burn capital for, we can have a discussion about what we think about the current situation and whether a capital raise would be warranted. And there's a few reasons why I do think that a capital raise would be a smart thing to do, even though, again, management has said that they don't think they need additional capital. I have noticed a slight softening around that language, I think, over the last earnings call or two. So number one is I basically consider it to be a safety net. So obviously, as I said previously, new rockets rarely go off without a hitch, and even more so when you're talking about a brand new engine. Now, Archimedes is a brand new engine using a different type of fuel than Rocket Lab has used before. Maybe that's not the biggest deal, but anytime there's a new engine with a brand new design, I do think that invites additional complexity, additional risk. There could be additional problems. I mean, just look at SpaceX with their Raptor engine, right? So that was by no means a smooth ramp up. They did have a lot of experience previously with their Merlin engine on their Falcon 9, but as they try to get going the Raptor on Starship, they have had a lot of reliability issues with it, things they've had to work through. It's looking pretty good now. It's getting better and better. They did still have several engines fail on the last test flight, and seems pretty normal to have to work through these issues. So the fact that we haven't even had a hot fire yet on that Archimedes engine when we're talking about launch in a little over a year maybe, I think that's pretty tough. That's a lot to ask. So if there's an issue with Archimedes, if there's a delay, if there's anything like that around Neutron, it's just a nice safety net to have, and you don't have to worry about the issues around the rocket. That's just number one, and that's just my opinion, of course. So number 2, okay, we all know guaranteed cash reserves in the future will get lower than they are today before they get better. That'll probably start turning around maybe 2025, 2026-ish. And as those cash reserves start to get lower, some investors can start to get nervous. I mean, we saw it with Virgin Orbit, we see it with Virgin Galactic, we've seen it with Astra, and basically what happens is, as the cash levels get low, investors start to get nervous, so maybe they sell because they're not as secure in the company and they don't know as much about it or whatever. I'm not saying Rocket Lab is those companies. Rocket Lab's extremely different from those companies, but the principle is basically low stock price can be a self-fulfilling prophecy that can cause you a lot of problems. So you're running low on money. People sell the stock because they're starting to get worried. Because they sold the stock, you have a lot more trouble raising capital, and then the capital situation gets worse. The stock price drops even lower. You have even more trouble raising capital, and on it goes. Chris Kemp kind of alluded to this in one of his recent interviews, talking about how horrible it is for them to try and raise any kind of capital right now, something I don't think he really saw coming. So it's almost like a blood in the water situation when you have a company with the capital reserve starting to run low, and it's really like, why take that risk that something like that can happen? Why not raise money early from a position of strength? If there's any sort of chance, even if it's like a 10% chance that there's going to be problems down the line, you'll need additional capital, why not just completely remove that risk before you get into any situation where the company's in trouble? To me, I believe that's worth it, and definitely takes the uncertainty out of the situation. You definitely don't want to wait till the last second when you need to raise capital to raise it. You want to preempt it while your stock price is strong, and we have seen the stock price be pretty strong at various points over the last year. I'll put up a stock chart here, and you'll see some pretty significant bounces we've had. Most recently, there was one that went up to almost $8 a share. Obviously, it might be a little painful for us to be diluted at a valuation when the stock price is around, $4 or $5. But if we get a bounce up to $6, $7, I think that could be a good opportunistic time to raise additional capital, de-risking the whole company, even if there's only a slight chance that they will ultimately need it for Neutron. Okay, reason number 3 here is dilution is actually not really the end of the world. I know a lot of people kind of think it's the worst, and I understand conceptually why you might think that, but it's not always that bad. Because, I know this is going to sound obvious here, but let's say Rocket Lab issues new shares valued up to $200 million to raise $200 million of capital. Sure, your slice of that Rocket Lab pie is now smaller by that value, but Rocket Lab actually has an additional $200 million in the bank, meaning the overall pie is bigger even though your percentage of that pie is smaller. It's not really a net loss, even though you are being diluted a little bit. I think the other thing you have to remember here, though, is remember who you're investing in and the management team and what they could potentially do with that money. Obviously, I don't think money is equally valuable in the same hands. Some people can really take an investment and turn it into an extremely valuable company in the future. Others, not so much. But I think most of us agree here that Peter Beck is an absolutely amazing leader. And I personally have a ton of confidence in his management and his ability to deploy capital wisely. So not only is he a smart business person, but he's an incredibly smart engineer, making a lot of the engineering decisions for the company, and I believe he's also chief engineer for the company himself. Really just a once or twice in a generation type individual. And even greater, he isn't surrounded by controversy and saying all these crazy things on Twitter. So let's take a look at what he's done so far with the capital that has been raised from the SPAC. I know a lot of companies that went SPAC are now running dry on cash, and you kind of think about it and you say, where did the capital go? Well, in Rocket Lab's case, they made 4 very smart acquisitions that really massively grew their space systems side of the business. Obviously, Solero, I think, will turn out to be a great acquisition as they burn through those old lower margin contracts. One of the few space-grade solar providers really provides that assurance that they can do any missions, extremely important to the spacecraft manufacturing side. Then you have PSC with their separation systems. They also have Sinclair with the reaction wheels, extremely important for satellites, and Advanced Solutions with the software to control those satellites, also extremely important. So some very savvy acquisitions. And the other thing that's great about them is so many of those employees and even former CEOs of those companies stayed with Rocket Lab, and they have great working relationships. Whereas you look at a company like Astra, they acquired that propulsion company. And basically, from what I hear, like 95% of the employees from that propulsion company walked right out the door after the acquisition. It's a lot of talent and industry knowledge lost. Not so here with Rocket Lab. They made some very smart acquisitions. Beyond that, Peter is just an extremely, I don't want to say cheap, but he's extremely frugal. He spends his money smartly. He controls costs very well. They walked into the Virgin Orbit factory and just saw all sorts of equipment, like crazy amounts of tools. And Rocket Lab does not have that kind of style. They make sure they only buy what is needed. They control costs very well. And basically, what I'm trying to get down to here is that $200 million in the hands of Peter Beck and the management team is something I would be extremely okay with, even at the cost of a little dilution to my own shares. So if we really do believe in him and believe that he's a, once or twice in a generation type of leader and engineer, then why not give him as much ammunition as possible to really accelerate the growth of Rocket Lab? And then number 4, I just want to remind you guys, if you haven't been in the stock market as long, dilution is really not that uncommon. It's actually, if you're an investor in Rocket Lab, it's something you've been experiencing for the last several years, perhaps without even knowing it, because stock-based compensation is very common, a very important way of retaining good talent, and Rocket Lab has been issuing pretty small amounts of new shares, but they have been issuing new shares regularly every quarter. I'll try to put up the chart from Main Street Data here as well so you can see the number of shares outstanding continues to rise, and you personally have not even noticed it. Beyond that, it happens a lot in the industry. Back in 2019, I was invested in a company called Tesla, and there was some concerns. I feel like they were kind of around where Rocket Lab is today, where they're pushing to go profitable, and they're not profitable yet. There were some questions whether they had enough capital to become profitable before they ran out of cash. And there's a lot of discussion, should they raise, should they not raise? If they raise, is it going to be really bad? Well, what happened? They did end up raising capital, and I was there for it. I had my shares diluted. But you know what happened since then? I'll put up another chart of the Tesla stock. $17 per share is what it was back in 2019, and look at it now. Like, oh my God, like, sure, it was diluted, absolutely worth it, de-risk the company. Who can complain at that kind of return? Even if we're not at like all-time highs, we're still at like $220 per share today, like outstanding returns. And that is after a dilution event. So those are my thoughts, maybe a little controversial. I know everyone wants to say they don't need to raise capital because the management has said they don't need to raise capital, and they're generally pretty good about sticking to what they say and delivering on what they promise. But I do think there is a case to be made for adding additional money to the balance sheet. Give management, give Peter some additional ammunition to do whatever they need to do, invest in the future, grow bigger, grow faster, reduce any risks. And if you run into problems with Neutron, it doesn't matter, you're safe. So let me know what you think about that in the comments below. Are you expecting they will raise capital? Do you think they're going to turn a profit sooner than I was anticipating? Or maybe all along you've just kind of expected that they would? Let me know in the comments below, and I'll check out what you guys have to say. Thank you guys so much for watching. We made it to the weekend. Happy Friday. I hope you have a good weekend. I'm about to head off on vacation. I do have a couple videos scheduled to come out though, but I'm going to be taking a few days off, enjoying some sun, and trying not to turn into a tomato. I'll see you in the next video. Hope you have a good week. Bye for now.